So guys, in this slide, we will be learning about candlesticks pattern. So in the previous slide, we have learned about candlesticks, the formation of basic candlesticks, right? So I hope you have already downloaded the booklet and you have gone through the booklet before watching the sessions. So we'll be covering about the candlesticks pattern quickly because you have already an idea about the candlesticks pattern from the booklet. So in this slide, we'll learn about a single candlesticks pattern. So we have many patterns to focus. So we'll be only looking at the major patterns in this slide. So everyone learn about candlesticks pattern, but not understanding the psychology. They don't understand what this is. What they don't understand the psychology. But my friend, trading is all about psychology, all about managing your psychology. So what we are going to do here is we'll be talking about the psychology of major candlesticks pattern. So the first candlesticks pattern which I'm going to focus here is I'm going to talk about doji type of candlesticks pattern. So if you look at here, there is less or no body at this point, right? There is less, you can't see bodies at this point in a doji. So this is a doji candlesticks pattern. This is how it looks. So if you look at here, what does this convey to us? It conveys that buyers and sellers have no control, taking the price to a point where there is no buyers or there is no body or there is no sellers. So that's how a doji happens. So if you look at here, let's say the candlesticks is not having a body. You can, if you read the here, you can see that the doji is a single candlesticks pattern, indecision between buyers and sellers. So whenever you are seeing doji at major levels, it can be at a support or resistance, or maybe after a breakout, you can see that doji is creating because there is indecision in the market. So buyers or sellers have no control over the market and they are struggling in order to move further. That's why we have a doji. So doji candle which open doji is a candle which open and close almost at similar level. There can be upper shadow and lower shadow of various proportions. So each of this doji candles have different names, but we are not going to look at this. We are going to generally talk about the dojis. So if you look at this is the psychology where the buyers and sellers has no control over the this candlesticks. It conveys to us that if you are seeing doji, it conveys to you that it is telling you that there is no control for the buyers or the sellers, which means that there is indecision in the market. So that's how a doji looks like. So I hope you are clear with doji. The next candlesticks pattern which we will be looking at will be hammer. So if you look at here, hammer, right? So let's read what a hammer really is. A hammer is a single candlesticks bullish reversal pattern. So this occurs after a downtrend. The color of the body can be either green or red. If the body color is green, then the hammer is considered a little more bullish. So a hammer can happen during a downtrend. So let's say if the price is going down, and you see a hammer like this, the price is going down, and you see a hammer. So not that good at drawing, but if you see a hammer, which means that there is a high chance that the price might reverse from this point. So the first thing which you need to keep in mind here is hammer pattern can act as a reversal candlesticks pattern. So that's the point. It can act as a reversal candlesticks pattern. So what is the psychology? What is the hammer trying to tell us? If you look at here, the price of the hammer, you can see that the body closed at the upper level, right? The body closed at the upper level, which means that buyers are stepping at this point and they are taking the price higher, and the price was not able to close like this. Instead, it closed like a hammer pattern, which means that we have rejection at this point, which means that we have rejection at the down area, right? We have rejection. That's why we are having a hammer. So I hope you're clear with that. So hammer happens during a downtrend. It can happen on a downtrend, or it can happen after an impulsive move as well. So it can act as a reversal pattern. It can form as a reversal pattern, and a hammer can also be if you see a hammer at that point, you can understand that there is rejection at this level. Why the price is rejecting? This is conveying that there is a rejection at this point. So I really like to understand. If you look at hammer and if you understand hammer properly, you can see that during a certain point, during a support or resistance, you can find good hammer patterns which conveys to you that there is rejection at this point, or whether there is it conveys to you that also there is buyers, buyers are rejecting the price and taking the price higher. So I hope you are clear with hammer as well. So in the next slide we'll be moving to the next pattern.